Tedeschi Portfolio Manager over at Perspective Wealth Planning with this week's market breakdown video. We're going to take a look at the 4 major U.S. indexes. We'll look at the U.S. dollar as well as commodities. And we will take a look in at some breadth readings in on the Nasdaq as we've had a pretty strong bounce and we're back at a key zone to pay attention to. Let's jump right into it. First and foremost, S&P 500 back up over its 200-day moving average, has held over that for the last week or so, which is pretty solid action. However, I'm recording this Thursday morning before the bell. We ran into this resistance zone, and we were looking for that push above with the CPI numbers that came out this morning, but the market did not like what it heard, and we are actually going to open back down around right here. So we're down about 1% right now, 30 minutes before the open. So we're still clearly above the 200-day moving average. And what was going on here over the last 2 weeks is we really are starting to have this flag that's put in play. So the way I'm looking at this, if we can get back up over 4,600 on the S&P 500, we probably should go back up and test that all-time high zone. But if we break underneath that 4450, that completely changes the structure of this market to where I think we would end up with a high, a low, a lower high, and then we would need to be on the watch down in this zone. So underneath here, that puts these lows back in play. You certainly could end up with a double bottom type pattern in here, but we just have to really wait and see. Bottom line, as long as we're trading inside this zone, we don't have a clear winner for that next direction, whether it is up or down. So we're watching this very, very closely here. As the indexes are very, very similar. Let's jump in and now let's take a look at the Nasdaq. The Nasdaq stayed underneath this 200-day moving average. That's that purple line that's on there. And you can see it's got that same kind of a flag that's in play. 15,000 is that big round key number. We're under it right now. We're at 14,800 while I'm making this video. The important zone is holding that 14,500. Underneath of that, that really changes the structure of this market. Let's look in now at the Dow. The Dow is the only one of the indexes to break above the previous week's high, and that happened yesterday where it made that nice break. So between the Nasdaq, the S&P, and the Dow looked like it was starting to make that push back up stronger. However, this morning it's opening at that 35.5 zone. So it's going to open back down around right here. When you're looking at this, again, we want to see a hold over that low from a few days ago, which is at 48.16. 34.816 zone, and we are looking for either a move up, a continued move up or down from right in here. But all of these are really starting to look very, very similar. We'll come in and we'll take a look at the Russell. The Russell also acting well in terms of over the last couple of weeks has continued to put in higher highs and higher lows on that low time frame. It's fighting right there at that major 2100 level. We get that gap down this morning, and the gap down is actually only to right here. So it actually is going to open on, a zone that if it holds would actually bode very well. It still needs to get back up into this range, so we're looking for a move over 2100. We really need to see it hold that 2000 area. So, a pattern like this would be completely normal and fine to see. So we don't really have any clarity here in terms of direction. We've had a strong push for the last few weeks, but none of the markets have really put in new highs or anything like that, so we're still kind of trapped inside these zones. And the bias since the beginning of this year has been to the downside. This is a nice strong counter trend. We really would like to see that continue. We're just going to have to pay attention and see exactly what goes on here. Next up, let's take a look at the U.S. dollar. The U.S. dollar is still just a mess, right? We broke to the downside, then we ripped higher and broke to the upside, then we broke back to the downside. We're going to remove this guy right here. We're going to remove this guy right here. And we're really going to start looking at this range more like this. All right, this is the zone in between 94.5 and 97.5 or so. This is what we're going to call that chop zone for the time being. A move above is very bullish. A move below is very bearish. So we're trapped inside this range. There's not a whole lot to do here. It's just kind of a mess. We look in at gold. Gold started to push itself back up here towards that 1850 level, having a big candle here today, off of the CPI numbers. Got to get back up over 1850, right? And it still, for the last few months, even though it's not really gone anywhere, you can see it has put in higher lows. So there is some work being done under the surface, which is a good thing for this market. But again, still kind of trapped in a small range and has a lot to prove. Silver, you needed to see back up over that 23.5 and then 25. Same kind of comments apply. We come in and we look at platinum. Platinum's actually making a nice flag right in here, but it's doing it, as you can see, right on the underside of the 200-day moving average. You really need to see that break to the upside, or that's not necessarily a great setup there. Palladium has acted much better, holding onto that 2200 zone, kind of in the middle of the zone. But again, 200-day moving average pointing down, and that's what's acting as resistance. It's not what you want to see. We'll talk about a metal that looks really good here. Actually, copper does. Copper's back above that 450 zone. It hasn't spent much time over at 450. It's spent most of its time between 4 and 450. So the fact that we've pushed up above that, we get a rising 200-day moving average. We're really watching that 48 level. Above that would be new highs for this cycle, and that would be a very good sign for this space. Oil ran up into the low 90s, pulled back down, it's holding above 90. It's still acting well. You know, there's not a whole lot to say. It's just basically been grinding higher for the last 2 months. Still looks fine at this moment in time. If we fall under 85, I don't like it anymore, and I'd like to see that push above 93 for a continuation move. We come in and we take a look at nat gas. Nat gas tried once again to get above that 550 zone, just not able to close over, almost all the way back down to the bottom of the range. This has been an absolute messy, volatile market, very tough to do anything with. And when we look at the bigger picture, like we've done a number of times, there's not a whole lot on this chart that we really like. Next up, let's take a look in at Bitcoin. Bitcoin trading under the 200-day moving average. Nice constructive move back up from that 33,000 level. The low of last year was at 28,000, so that was kind of the bottom end of this range, was 32 to 28. That's where the bulls had to hold. They held on. We've gotten a nice bounce. Well, all we've done is we've bounced right back to the level we fell off a cliff from at the beginning of the year, which was that 46,000. So it's basically flat for the year, slightly down. Bulls definitely need this back up over that 46,000 level, and then that next resistance becomes that 52,000 level. Now, we have talked a ton about the breadth readings there in on the Nasdaq and the importance of what's going on. We know at the end of last year into the beginning of this year, we had a period of time where only 1 out of 4 names on the Nasdaq were above their 200-day moving average. We're now back to that 50% zone. But look, when we look at this chart, we've talked about this a bunch. That 50 to 55, this is that level. If you hold above it, it bodes well. When you break down below it, it does not bode well. That is how the last couple of years have played out. We're now testing it from the underside. This is a bad time to fail. We really want to see this get back up over 55. If we do that, we still have a series of lower highs in play, but we're above that really, really key half of the stocks above their 200-day moving average, which means we have a potential for more stocks to be kind of leadership name. You've got more things that can help raise those indexes, and it is a lot better. So we're going to pay very close attention to what continues to happen here. We've talked about it a lot. It has been a very nice turnaround over the last month or so after that strong push to the downside. So what happens here? Very important, not just on the charts as we've laid out here today, but also what's going on under the surface with the percentage of stocks above their 200-day moving average. As always, I want to thank you guys for tuning in. I hope you found this information useful. You can reach out to me if you want to talk anything about the markets at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I look forward to hearing from you guys, and as always, I'll see you next week. Take care.